Hello traders, this is Fawad Razak, dollar market analyst for City Index. Today is the 11th of February. So the markets remain in a holding pattern, and traders have largely ignored the latest tariff news on steel and aluminium prices because they feel Trump is using it as a negotiation tactic, given that they come into effect on 4th of March unless a deal is agreed before then. So for now, at least, the markets are not very concerned about this. But one thing that is becoming clear is the rising bond yields that you can see over here, which have bounced back after Friday's strong jobs report, which, among other things, showed that wage growth increased by 0.5%. On top of that, we saw the University of Michigan's inflation expectation survey surge more than expected, and that has caused inflation uncertainty once again. And for that reason, we've seen bond yields rise as investors have pushed out expectations that the Fed is going to cut interest rates soon. And that has caused the US dollar to stage a bit of a comeback, especially against currencies which have low yields, for example, the Japanese yen. Now, by the time this video is released, you will have probably heard from Powell already. But do watch out for inflation data tomorrow, which is this week's key event, really. And headline CPI is expected at 2.9%, unchanged from the previous reading. We'll also have PPI data the following day and retail sales on Friday as well. So a few important economic data releases. But looking at the currency markets now, the dollar yen is bouncing back slightly from around the 152 area. Can it rise back above the 200-day moving average is the key question. I think if we go back above the 200-day moving average, this could potentially pave the way for a bit of a recovery towards the base of the previous week's breakdown at around 154. 154, this level right here, is now the most important short-term resistance level to watch. On the downside, if support at around 152, 150, 150 area breaks down, then the next downside target is the psychologically important 150 handle. The euro dollar remains in a range between 102 on the downside to 105 on the upside. In between, there are a few minor support and resistance levels to watch, including the 103 handle, which has provided support today. Interim resistance comes in at 103.50 level, this level right here, where the resistance trend and the low of this candle come into focus. Interestingly, gold has reversed after hitting a new all-time high overnight. It dropped around $50 off its earlier highs to turn red on the session. However, it's now testing support at around 2,880 area, the shaded region. Can it hold as support, or will we go below? For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. See you in the next video. Take care.